Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking equities and those E-mini S&Ps, another new high. Can you believe it? We hit all-time highs again, just ahead of the employment report, which last month is going to be a little bit skewed, so it's expected to be a little bit weaker. So I think a lot of the numbers that we see over the course of the next couple weeks will be skewed and will probably get a pass as far as strength or anything off the charts to the downside. So lack of strength, I should say. So right now, market just sailing away, following the trend. We're not seeing a whole lot of change, no fear. Volatility reflects that. We're trading back below 10. Haven't seen a settle below 10 since early last week. Likewise, we've only seen one day of trade above 10 in the VIX index this week on Monday, and doesn't look like we're going to see that ahead of employment. So indexes, E-minis keep rallying. We keep seeing the volatility indexes decline. Interesting to note here, since September 8th, we saw this kind of market turnaround. We saw treasury yields rise, we saw stocks rise. Well, that wasn't a change. We saw gold sell off. We saw a lot of things shift, the dollar rally. Right now, if you lap over the BKX index, which is the bank index ETF, if you lap that over Treasury yields, it mirrors pretty nicely, because obviously the banks really want Treasury yields to go higher so that they are able to show more profits. It widens their profit margins. So I think as Treasury yields go up or are expected to go up, that will help the banks, which obviously is the foundation for a lot of what happens in Wall Street. So right now, that is a good signal. If you start to see that BKX index turn, it may be a signal that yields aren't going to stay higher, or at least aren't expected to go higher, which could be negative to stocks, at least keep us from making all-time highs every day. So right now, equity is still following that trend, still looking strong. Keep an eye on the bank index as a way to kind of monitor where you think Treasury yields are going to go. And we'll have to see what happens on employment on Friday. This is Todd Colvin coming to you from the floor of the CME Group.